Hello and welcome to Pro Trader Strategies Market Commentary for Friday, December the 18th. I'm Eric Wilkinson, and you very well may recognize me from mainstream media where I've talked about the economic data, the geopolitical environment, how that comes in to impact the markets with some of my market analysis. I do the same thing for you folks out there in these daily market commentaries, but I go a little bit further and talk more in depth about my option strategies I'm implementing into my portfolio based on the assumptions I come up with my market analysis. I also go a little bit further for you all out there, and I have created over the course of my trading career, which is over 25 years, streamlined that process for you to find the absolute right and most optimal option strategy for any given assumption. We don't just look at a directional assumption being bullish and go out there and buy calls. No, we look at what's going on in and around that underlying and find the most appropriate option strategy for any given directional move. All right, what we're trying to do is turn that table of probabilities into your favor. So please check those out at protraderstrategies.com. Also, give me a comment. Tell me what you like to look at for your directional assumptions, how you find your directional assumption on any given day. Would love to hear from you all. So please comment down below and let me know. Give me a thumbs up also so I know you're all out there. All right. So without further ado, let's get on with that economic data. Across the pond, we got German PPI, Producer Price Index, coming in at 0.2%, expected to be 0.1%. Great Britain, retail sales coming in at negative 3.8. Well, we'd expect that to be pretty bad, but I guess it was a little bit better than what was expected. And a slight revision to last month's number higher. Also, we got CBI, industrial order expectations, out of Great Britain. That came in at negative 25, expected to be a negative 30. So better than expected there, but you know, that basically is telling us the future outlook is that orders are expected to go down. All right, so that not necessarily a good thing. Canada retail sales better than expected. Nice to see there, but not really going to drive overall markets. And then here in the United States, we got the leading economic indicators coming in at 0.6, expected to be 0.4, and a slight revision to last month's number, up 0.1%. So better than expected there, but a far cry from what we're used to on economic data points. All right, so let's look over at the overall markets, see how we're looking there. Crude oil continues to climb higher. It looks like that $50 a barrel is almost a sure thing at this point. A friend of mine just texted me this morning, was like, what's going on with gasoline? It went up 20 cents at the pump by him. Well, that's because we're encroaching on $50 a barrel. That's what I was talking about. So think about it. If it's gone up 20 cents overnight somewhere, I haven't checked near me or everywhere, but 20 cents is about $3 to $4 per tank of gas, right? Well, that's $3 to $4 that somebody could spend weekly elsewhere. And if you think about it on a monthly basis, if you're filling up once a week at least, well, that's $20 or, you know, somewhere, you know, basically $16 to $20 a month. Now, that doesn't seem like a whole lot, but when you think about everybody who's filling up their gas tanks, well, that money is not being spent elsewhere in the economy, which is desperately needed right now. So crude oil continues to climb higher despite the fact that we have huge supplies there, likely because people are waking up to the dollar breaking down below that 90 barrier. So a weakening dollar will strengthen a asset like crude oil, gold, because they are that asset is backed by the dollar. But I would expect that the glut of supply, I should say, should cause this market to come off a little bit more than what we're seeing here. Again, it goes back to that old adage, the markets can stay irrational longer than one can stay solvent, and this very well could be a case in point for that type of adage. All right, gold futures just off a little bit today, finding a little bit of resistance up there around my little flagging chart setup here, bumping up against this top part of the flag. A break above that would really give this overall market some upside momentum. But right now, as we speak, we're continuing to really see lower lows and lower highs. until we break up into that 1900 handle is really where we're looking for there. Bonds unchanged for the most part, finding support on my 50 Fibonacci that I have lined up here. It also is lining up with a value area low. Point of control just slightly higher there. So not a whole lot to see here other than interest rates seem to want to go higher at this point, despite the fact that we're seeing the Fed talk about lower interest rates for the foreseeable future. Bonds should probably be following suit, but they're not at this point. VIX starting to climb. Why? Because we're seeing some equity weakness across the board here. We see the Dow Jones Industrial Average off over almost 200 points on the day. Again, pretty tight range though the past couple of weeks where it feels like we're getting that rubber band wound up, right? I've talked about this time and time again. When you see the markets trending sideways in a tight pattern like this, it has a tendency to build up some momentum or some pent up energy, I should say, and waiting for that snap to the upside or the downside. What would I be leaning towards? The downside in the overall markets is what it feels like to me, that the markets want to start migrating down. I've been adding negative deltas to my overall portfolio, as you guys have seen, to make sure that if there is a correction here, albeit maybe even just slightly, I'm able to take advantage of some of that downward pressure that I'm expecting here. And we can see with the NASDAQ down 63 points, you know, an engulfing dark cloud here, as we can see in this. I'll blow it up there a little bit more, but you can see this red candle as of right now is looking like a dark cloud over our last candle there, which is a bit of a bearish signal. Maybe next week we'll start seeing a little bit more correction and get back down into my little 2017 trend channel there. E-mini S&P is off also by about 21 ticks on the day, and again another engulfing pattern here on the previous day's candle. That is a bearish signal. Yes, we are still above this 9-day simple moving average, so that's giving a little bit of hope for some people that we are still in a positive trend. If we break below that 9-day, that's going to start signaling short-term weakness there. All right, let's take a look at the breakdown of this E-mini S&Ps. And you can see we've got another overnight high. Tried to get that printed during the day. They keep trying to do that, and it doesn't happen. And as soon as we started getting economic data across the pond and here in the United States, we start weakening in our markets there. Let's take a look at a trade that I've done. Square. Yes, I might be in a little bit early. And as you guys know from watching these daily market commentaries, I do like to get in a little bit probably early. But this whole candle setup right here, we've got that spinning top doji at the top of a big move here. That is a quintessential sign of a top. Now, we haven't gotten it confirmed. We needed to trade below yesterday's low really to get a confirmation of that, which is $227.70. So let's call it, if we settled below 227, then that would be a confirmation. At this point, holding on, one of the few stocks that is still in positive territory on the day. As we can see across the board, we're seeing equities negative. That would lead one to believe that most equities are in negative territory, other than the ones that we have in my portfolio. But having said that, I still believe this is a good downside for this trade. And I went in and did the March and bought the 220 puts in there for $18.85. Remember that multiple we talk about. There's an option contract multiple. So you multiply that by 100. So basically I had to lay out $1,885 for every one contract that I did. And I did this small because it isn't confirmed at this point. But the 220 is not too low. That wouldn't be a major correction. We could even possibly still be in a bullish trend and still hit those short puts that I have on in this market. So that's what I'm looking for in Square. Just a small correction, maybe even more of a correction down to test 200 would be quite nice for that trade, right? So that's kind of where I'm looking for in this, is somewhere to retrace back towards that 200 even handle. 220 would be nice, but at the end of the day, I think it could go a little bit further than that even as of yet. So that's all I've done today. Keeping an eye on a lot of other things in my portfolio. I do have a working order in 22nd Century, way lower than this, but Some dollar cost averaging right around 99 cents is where I'm looking to pick up some more if it gets the opportunity to go down there. The other thing is PIN continues to move higher today, broke above 90, and this market is off to the races now that we're above this Fibonacci extension right here. As soon as it got above that yesterday, it looks pretty darn bullish that we're going to go and test 100 here in the near future, and it is just almost unabated to the upside with this stock. Just a crazy run from basically $4 to $100 in a matter of a year. Portnoy just knocking it out of the park with this stock right now, and as they invested in Barstool Sports. So that's why PIN is so correlated to what Portnoy is talking about, and trying to pump this stock as well, doing a pretty good job at it as he does with just about anything. All right, and that's about it. I hope everybody has a great weekend, and make sure that when you guys are following me, you understand your risks of trading. Some of that is going to be explained here in our disclaimer, so please take a moment to go over this disclaimer, as we are an educational company. I'm not trying to get you guys to do any of these trades that I'm doing. What I'm trying to do is educate you guys on how we can implement options into our portfolio in order to increase that overall yield rather than just going out and getting long stocks. All right, that's all I got for you guys. Have a great weekend. Like I said, please give me a comment below what you guys look at for trading and how you find your directional assumptions. I would love to chat back and forth with you guys. And that's all I got for you, other than if you can't take that, take it easy.